screen's coming on.
We're up.
And we're up.
We're up. We're up. Oh my God.
So we're trying to get the Facebook Live, and sorry about that, folks. It's technology. It's still showing live. Karl was going live on his cell phone.
Hey, I come up with a solution.
On our Facebook.
Live on live on live.
But I think it worked, guys. I think you're here. How is everyone doing today? Thank you, Pat, for that interview. We'll be sure to get that up on a separate thing.
Yeah, he's doing good things.
Spread that. I love it.
Yeah.
Love seeing Pat do well. I like
It
the guy.
all started with Matica, I'll tell you.
All started.
Yeah.
But we don't need to steal his limelight. He's doing amazing things.
Yep.
It's awesome to see.
It's
I
cool.
love getting updates on what he's doing, where he's going.
Everywhere I go, if I go to a conference, I just see him. I just see this little ball of red hair. Zoom, zoom. It's just taking photos of everybody. Always video. Always taking video as well. So it's always great to see, man. Thanks for all this stuff, man.
What do you have in your Whalen cup there, Brandon?
Vodka.
Straight.
CBC infused vodka. You don't know about this yet, though. It'll come soon. Yeah. It's really, really smooth.
Got a buddy of mine that likes vodka. He'd like
Great
that.
story.
He'd like that product.
No, wow. What product? Did he even tell you the product?
So, Karl,
Carol?
what are you excited about these days?
Well,
What are you looking at?
I'm excited to be alive. What do I have up here? I got weed is up 6%. What's Afri at though right now?
Afria? Afria is at, that's my mining.
That's my mining.
It is my mining, actually. Afria is at 1521. It's not bad at all, actually. It's doing very well.
I was just thinking, we probably could go live from your feed and my feed at the same time.
A Facebook Inception
Correct.
on the Midas Letter Network.
Yes, it actually would work.
Wow.
Just saying.
Are we going to try that next time?
That's right. Right now, you guys talk.
All right, go.
Okay.
No, just do it from your own personal or something. But news-wise, what's been coming up?
Oh,
Mr. Newsman,
Let's
for all
see.
those that don't know, if you ever go to FTMIG.com, all of our news releases, if it's in cannabis or mining, it goes up there. And this guy wakes up at 5 o'clock in the morning, every single morning.
it's not just me. You gotta throw it out to Toddy too.
Toddy, Zach, thank you for jumping in
Oh, yeah.
as well.
Oh,
But
absolutely.
what was the news saying today? Anything crazy?
Well, I mean, I remember you talking about how Trulieve, I guess in Florida, you can only have up to 20 retail stores.
That's what I thought, yeah.
They just opened their 21st.
Which I don't understand. You were telling me that earlier. I
That-
don't get how they were able, because I was almost positive they had 20 was the max there.
Yeah.
But I also remember remember someone telling me that they were going through.
Like applications to get more.
Yeah, they're trying to extend that,
Yeah.
so they could have more.
Well, they got the
Trulieve
21st, it says. So, I mean,
Yeah.
that's huge for them.
And the craziest part is that they're all medical.
Oh yeah.
They're all medical,
Well, it's because
and their revenues
older,
are
retired
incredible.
people that move there, right?
Yeah. Who was
you
it?
need the medical.
What were we watching? Something came up. It was either something on Facebook or someone was talking about it. Was just this whole aspect of America, U.S. cannabis, and how yes, it's very important. We're talking about Canadians and being able to export, and it's going to be massive. But the economy in the U.S., like people are underestimating how much, even if they don't export, how much sales and how much revenue they can get from being in there. It's crazy.
Mm-hmm.
And nobody gives a flying rat's ass right now, and I don't know why. That's where you're going to be able to get.
He's coming on glued.
Yeah.
Coming unglued? No, it's the CBD vodka. CBD vodka. But I don't understand why not, because I know a bunch of our members are now, they're saying they're almost all going into U.S. cannabis.
A lot of them are. Oh, absolutely.
Are you?
I don't know if I own any. No, I don't. I don't own much cannabis. A lot of my stuff's in
I
mining
have
right now.
TGIF on my watch list.
Good one, yeah.
BAM. Got, who else do I have?
TGIF? Is that ticker still going?
Yeah, isn't it? Yeah, it's 1933 Industries.
Oh, they haven't switched it over yet.
They haven't switched the tickers yet.
Gotcha.
But that one looks like a nice one, like MPX, like
Yeah.
Anthus.
We almost had 1933 Industries on the show today.
Was that today?
Yeah, the CEO had, I think, a surgery or something to do with his shoulder or something like that. But we'd
Okay.
love to have him on. If you're watching right now,
we'll
randomly,
get you.
while you're recovering from your shoulder surgery, come on the show.
Yeah, Dottie's already on it right now.
Yeah, but no, all of it truly is really interesting. Green Growth Brands. Remember, we went to the what
US
conference was
Cannabis
that?
Symposium.
Canaccord Oh,
Yeah.
you just said that exact name. Thank you. Was not going to remember that.
Nope, not one bit.
But a Canaccord put together event,
Yeah.
and all of the U.S. It was strictly U.S. cannabis companies.
There's a symposium going on in Hong Kong soon. I think it's either like, I don't know when it actually is, but
Well, something's happening right now in Hong
American,
Kong
or
because I know
Wayland.
Graham from Wayland is out in Hong Kong. I think it's like a whole second.
Yeah.
Interesting. I know nothing about Hong Kong cannabis. Nothing at all. That's
Yeah.
something I have to start. We'll have to give more calls over to Deepak because he's the one who knows all those things. Because
yeah, probably.
I had no clue Hong Kong even had an interest. It's amazing how this is spreading.
Oh yeah.
Right, Karl?
Well, here too.
We've got. I'm going to see what we're throwing over. We're throwing over. So we spoke about mining. We spoke about cannabis. We tried to talk about tech stocks, but that was shut down really quickly. Nothing came out of that. But going into like an overall market, though, we had Andy Blanchard come on here to not talk necessarily about cannabis, but what is going on in the economy around us, because clearly something's happening. Capital's fleeing. So let's go to there now. And we're here today with Andy Blanchard. Thank you, my good sir, for taking some time and speaking with us today.
Not a problem. Glad to be here.
For those watching, Andy, you've been in the sector for quite a long time in the equity markets and investing, spending almost 30 years, or exactly 30 years, I think you were saying, as VP with IPC Securities. You're now a financial planner, but still incredibly involved in what's going on with the markets, and that's what we're calling you today about is what's going on right now.
Not a problem. I probably start off with sort of an interesting quote, and that's basically many years ago, there was an individual that said that October was the most dangerous month of the year, right along with January, February, March, April, May, June, July, August, and September, November, and December. And it really doesn't mean anything. What we see, and all I'm doing is talking from my past experience, and specifically not saying anything with regards to investing today. But what we see in the fall is what they call window dressing. Window dressing is where the portfolio managers start to clean up their portfolios, because at the end of the year, they are basically going to be rated by the different ratios and formulas that the managers are scrutinized with, and they're trying to make themselves look prettier. And they call that window dressing. So we see that happening year over year over year, and it's always a fall right up until December where the portfolio managers are making changes. And one of the interesting things as a personal investor, I read a market piece from EdgePoint, and they provided a very interesting chart, and that is if you subtract the big six from the S&P, that's Alphabet, Amazon, Apple, Facebook, Microsoft, and Netflix, the market has actually only returned a 1.5% negative return from January 1st to April 30th. So this really hasn't been a bull market. It's been a bear market for over a year now. And what we're seeing is the big six correcting, and now we're seeing a flight to quality. The tech market is a sector market, and people are flying from the sector right now, and they're moving to good quality investments.
Yeah, and it's interesting that you note that, because those massive companies have clearly massive market caps, and they're really, what happens to them, I mean, those companies like Amazon and Facebook and all these other, it's funny, they've become almost their own indicators. You talk about whether the S&P 500 is red or green, you talk about certain sectors, but then people are like, oh, Amazon red, that's why. Like one company has that much power. And I know Amazon, I think on Thursday, so I think tomorrow or Friday, they have their earnings, and Facebook just came out with theirs yesterday. It missed the expectations on revenue or revenue growth, one of those two metrics, but it did beat it on earnings per share. So I actually haven't had a chance to look at it today to see if that's helping us prop up. But it's interesting that you note that, because it's a lot of people are asking themselves, you know, a lot of our viewers are in cannabis stocks and mining stocks, but they invest in other things as well. And it almost looks like capital is just fleeing right now. And you said, you know, one of those aspects could very well be this window dressing, where, you know, those sectors I just said are very, very speculative. If you're getting ratings on how safe your investment is, you probably don't want a huge allocation of that in your investment portfolio if you're a big fund manager.
Absolutely. It's a crucial measurement that comes out in January. And when they look at those portfolio managers and they see what their rate of return is versus the amount of risk that they took, it all boils down to putting all of the managers on the same measuring stick. And if you're getting a 10% rate of return, but you took high risk to get it, you're really not a great manager. So ultimately, you know, when I reflect on my career, we look at portfolio managers who sort of did the straight and narrow road, the investing in quality, producing consistent returns year over year over year without taking the big leaps into the big six or whatever the flavor of the year is or the month is.
Yeah, and it's hard, right? It's hard as a manager. You have to. Some people don't fully understand. I don't fully understand the life of a fund manager, because when I'm looking at my investments, I'm a very, very risk-averse person. I don't mind seeing my portfolio fluctuate within sometimes like 20% in a day. If you're a fund manager and your portfolio is fluctuating 20% a day, I think you're not going to have your job for too long if that's the type of risk that you're taking.
Exactly. Ultimately, people don't mind taking risk when they're fairly young, but you know, the stress test is, and people just don't realize the stress test, but it's a very simple stress test. How much money are you prepared to lose at the casino in a single day? Okay, are you comfortable with losing $10,000 this afternoon at the casino? And most people will say no. And then I would ask them, when I was working full-time as an advisor, then why are you trying to take that kind of risk in your portfolio? Mm-hmm. Okay, and if you can answer that stress test question, then it becomes very simple where your money goes.
Yeah.
And managing it yourself, well, that's okay for some people, but ultimately, you got to be honest with yourself and say, would you go to the casino and do that?
Yeah, and I think a lot of people, you know, when you, going back to just cannabis specifically, we watched legalization come through on October 17th, and a lot of people were saying, why would it be sold in the news? Everyone knows the news. Well, no, if that mentality is still in there, I almost promise you institutions are going to push for that. But I don't think anyone really thought there would be such a drastic pullback in this. And I think that kind of goes back to what you were saying, where, you know, you get a little bit of a pullback with institutions selling and maybe lightening their load. Then possibly you're hitting some stop losses on the way down. Then panic starts to ensue. Then the market's losing its security or its trust in what's happening. You've got these big six starting to correct a little bit as well. You've got S&P 500, you've got the NASDAQ. All these things all at once are coming down. But when that next push, that I can't believe it just went 20% 2 days in a row, I really think that next push are those people that you're talking about, where they're just like, I can't take it anymore, and they finally just sell. And it's unfortunate because they're doing it off of fear, and probably they overextended themselves and they didn't quite do that type of a stress test, saying, can I watch my portfolio go down by this much? Clearly no, but they found that out when they're already down 35, 40% and just couldn't take the stress anymore.
Yeah, I reflect back on 2008 when the market was down big double digits, and the interesting thing is the people who actually stayed the course and invested more when the market was down came out of that market looking absolutely wonderful. One of the things that I've noticed over the years is that the people who seem to do really, really well in the market are the ones that are consistently investing in blue chip stocks with high dividends. Specifically, a great example is the banks. The banks seem to increase their dividend almost yearly, and every several years to 10 years, they seem to split. And if I reflect on anyone that walked in the door when I was working, who bought bank stocks or utilities or anything like that back in the 50s and the 40s, and they came to see me in the 80s, they were multimillionaires just because their stocks split and the dividends reinvested, and they got more and more and more money and growth over the years than the markets actually returned. And this is for a very interesting reason. The indices are what they call survivor indexes. So the indice today, for instance, the S&P 500 or the TSE or any of those markets, they're only a reflection of the current stocks that are in that indices, but not a reflection of what was there 10 years ago or 20 years ago or 30 years ago. The only thing that's consistent in there is the blue chip, big dividend paying stocks that have just been around forever. A Canadian bank that's been around for over 100 years, that sort of thing.
Yeah, and I'm glad you brought that up actually, because I mean, for myself, I am not in any of those stocks, and I understand why I'm not, because I'm very honest with where my portfolio is, where I'm at. I spend a lot of time thinking about it. But there's a lot of people out there who I strongly believe, because of cannabis, are investing for their first time. I mean, I've spoken to people at TD, at Questrade, and it was amazing how many different people told me that they had so many different TFSAs, like record amount of TFSAs opened up and all these everything, and they're all saying that they're going into cannabis. But the reason why I'm glad you brought that up is that we have a lot of investors right now who are so used to this high flying, make 15, 20% in a week or whatever it be. I always like to stress to them, I really don't believe that's normal. That's not normal. If you are making good money, you have to understand it's okay to have a few high flyers, but you've got to find a time where you start putting a little bit of your money into more stable investments that can grow over time, and stop thinking about a double tomorrow. Start thinking about constantly doubling your money over the course of the next like 15 or 20 years. And banks, I've heard from so many different people now, banks are constantly having returns, and it's the dividends as well that over time, as those grow, you start getting exponential amount of money coming into you. And I think more people need to look into that.
Well, there's lots and lots of opportunity in the market, you know, and there are great rules of thumb. And the one rule of thumb, I was always a contrarian when I was an investor in the market. You have to go, there's an old, if I remember the ratio, 2% of the people walk away with 98% of the money on the market. So if you're investing with the 98%, you're going to lose your money. If you're investing with the 2%, you're going to walk away with everybody's money. And you think about that's a really profound statement, which states that you have to be a contrarian, because if you're a contrarian, you're with the 2%. If you're investing with the market, then you're in danger zone because somebody's out to take your money.
Yeah, I'm a firm believer that once I start seeing it on all the different Facebook channels, on Twitter, on CNN, on Fast Money, and all these different, as soon as I start seeing it get into all these different avenues, I already know that the good money's been made, and now they're just looking for liquidity events. So I'm slowly learning myself as well, but we got to go for today. I appreciate you coming on the show. It's nice to get the opinions of people who have been through this for not just one cycle, but you know, for decades, looking at how money is traded from one hand to the other. So I appreciate your time. We'd love to have you on the show again in the near future. And again, just thank you for coming on today.
Great, Brandon. Thank you very much. It was fun.
Absolutely. Thank you.
And we're
Back.
Did it.
You didn't do it.
I know.
Didn't do the pat on the back.
Sorry.
Oh.
That was a great interview with Andy.
And you had some points on that as well.
No, yeah, a few different things. I only caught the tail end of that interview. I want to definitely watch it again and get the whole thing. But I mean, I think what I can say is, I know some people follow me in our chat rooms and stuff, and I often tell people like don't follow me, because I've set my lifestyle up a certain way where I take a certain amount of risk, but my overhead is so low, I don't, you know what I mean? I'm not going to get too hurt if things go really, really bad.
Yep.
So, you know, that's something I just want to throw a little warning out there. You know?
Yeah.
I think, you know, and again, I didn't catch the whole interview, so I could be way off, but I think a lot of the money that Andy would have been working with, those people were probably individuals. They could have been high net worth or maybe doctors, lawyers, whatever, but they probably took a lot less risk than us.
Yeah, very
so
conservative.
Exactly, right?
Yeah.
So which is good because you know, he's not going to lose their money, and they stay the course, and they have a really, really strong retirement savings, right? And what we're doing as speculating is much different. And you know, you have to really set yourself up. You know, you've got to have structure. You've got to have a foundation. And I preach these things on our Facebook Lives and all that stuff, getting into much, you know, deeper things on how to set yourself up, you know, to take shots.
Yeah.
If you think there's a bull market, and you know, on these high-flying juniors, whatever, it's cannabis or mining or whatever, you know, it's a different style.
Yeah, and I think it's important to have a combination. You know, I took a lot of different finance courses throughout my schooling, and it was always you have to understand allocating parts of your finances and parts of your portfolios for different things. I mean, the three of us, I think it's safe to say, we are in the riskiest part of our portfolio. I can go into me personally, go into an investment. I am perfectly fine if it completely gets wiped away, if that's my chance of getting 5 to 10 times my money, because I'm a speculator. I like that aspect.
Yeah.
But once you start having kids, family, do those different, like you want to be able to have enough money where you could still have fun like that. You could still do your different plays, still have whatever. But I am a big believer of having stable investments as long as your money is in something that's not a savings account.
Right.
If your money's in your savings account, you are losing money, the time value of money. Go Google it. You're losing money.
Yeah, right. So for example, for me, I looked at this opportunity 3 years ago, specifically more with cannabis, right? And I'm like, okay, I had X amount of my money in real estate, so I move things around, right? But I have a real estate investment, and it's done very well. Even though the market's pulled back, it's still up about 30, 40%. 30% would be, you know, conservative guess, I guess, on what that property's done. But you know, my better half and I, we've set ourselves up a certain way. Our overhead is very, very low. I still drive a 2007 Hyundai Tucson that I bought back in 2007.
It's a sweet car.
It's got 324,000.
You just had to take it to your friend to get it fixed, didn't you?
Yeah, actually, yeah. Thanks. I want to give a shout out there to my.
Any chance for a shout out?
Yeah.
Go on.
So, anyways, but you know what? I do go to the Mercedes dealership, and I just test drive cars, and then, you know, I took the kids there actually last weekend. I took the kids on a test drive, a nice E400 Cabriolet, and then, you know, I was explaining to them after how this is a liability, and how we don't need this, right?
Yep.
Anyways, so
fun times. You just got to. You have to know what you're doing at least. You know, if you know you're really risky, that's okay. You know you're risky and you've planned for it. If you know you're really conservative, okay. Well, I'd rather you be conservative and still like investing something. You got to find a balance.
I'll be honest with you. I've talked to a lot of people that hand over their money to a manager to invest their money, and I ask them a question: is your house an asset or a liability? And they do not know the answer to that question. They actually think their house is an asset. It is not. It is a liability. Why is that? Look at the balance sheet. Look at the bank's balance sheet on your house. Your house is actually their asset and your liability. It costs you money every month. Yeah, it might go up in value, but you're not a speculator. You own that house, right? Make sense?
It does.
Your house is not an asset, it's a liability.
You heard it here first, folks. You heard it here first.
No, but my point is that a lot of people that hand their money over to a manager, they don't understand the principles of money. It's a commodity.
Yeah.
Right? He does, but he can't lose his client's money. It's a much different risk situation. And again, I haven't watched the whole interview, so I could be off. Don't quote me on that. He would probably agree. I would like to meet Andy. I would like to meet Andy.
I like talking to him, man. and you're so true. And one of the things he said on there as well was about window dressing. I really like that point about window dressing for fund managers, because fund managers invest differently than us.
Correct.
So they have a whole other world. So what he was saying is that in these months leading up to December, they need to start de-risking themselves because you get rated between now and December for what your portfolio is. So if you, his exact words are, if you made 10% return, but you were a high risk fund, you're actually a bad fund manager compared to someone who made a 10% return and they were, just a little bit aggressive, or comfort aggressive, as TD calls it, comfort aggressive thing. You made me no money. I sold it all, but that TD that is. But you have to have that, and that's where you start seeing a lot of these speculative plays, though. A lot of these things get large sell-offs. Usually cannabis has been pretty good right now.
Well, there's also tax law season.
But
tax law season is coming, so you look at some of these. This isn't advice, but it happens every time, every year, right? Where some of these stocks that haven't done it as well, their losses for some people, they will use that as a capital loss, right? And so you'll see some of the losers will actually. They'll actually come down even more because they're being used for now what they are, which is basically a little bit of a tax move.
And for those who are like, what on earth the capital loss is, the basis behind it.
Well, I'm not an accountant, you know what I mean? But at the end of the year, when you look at your profit and your losses, it might be a strategic move to take something you have a loss in, if it's in your cash account, that'll offset your gains, right? Yeah. But I should note that, again, do not take, this is not advice, but from what I've been told and what I've learned, that you can't take a capital loss out of your TFSA. So when you actually hit the sell button in your account and you have a loss in your TFSA, it's not going to be a tax loss. Mm-hmm. So. And I think people don't understand how TFSAs work as well. So you can balloon your TFSA, pull money out the next month or next year, you put it back in. Now you've ballooned, like let's say you started with 50 grand, you made 100 grand, you pull that 100 grand, you can now the next year put 100 grand back in. Yeah. But if you lose, you actually shrink your TFSA.
So I want to go on that point for a second, because I guarantee there's someone out here in finance or someone out here who's saying, you know what, you're wrong. And it's funny because I always thought that was not true. Someone from our group, actually, I think it was last year, was talking about that, because usually, you start off, this was started off when I was, I think 18 or 17, the TFSA, and every year you add more. It's almost always been 5,000. Harper did it for 10,000 one year, went back down to 5,500.
Yeah, the government changes that.
You have certain amounts for it, but what you said there, if you grow it to $100,000 and this year you take out $100,000, next year your limit doesn't go back down to what it was. So your limit was technically 55,000. Right. You get to put back whatever you took out the year before the next year, and most people don't know that's actually a thing.
Right. So that's what I was just saying. So and honestly, sounds crazy, right? But in cannabis, there's literally TFSA millionaires off cannabis. You go to the bank and they're just like, "How did you make so much money in TFSA?" Mm-hmm. You know what I mean? And but I'll be very honest. A lot of people, the tellers there at the banks, they don't know nearly as much as I do. It's unfortunate. I help a lot of friends out. I'm like, listen, the first thing you got to do is go open up a TFSA, and they go to open up a TFSA at the branch, and they don't even know what to do. It's like you're actually better off calling direct investing and doing it kind of more over the phone, and you have some documentations that has to be filled out, whatever. But anyways, these are things that we should ask buddy Johnny Mac.
Johnny Mac, when he
comes
comes on.
Really good with stuff like that.
Yeah, and these are good things, because a lot of people who are watching this, they don't really know all the ins and outs of what could be a capital loss, what cannot be a capital loss. Those are important aspects. And again, we're not accountants. I was really close to being one, but didn't want to take that route. But you've got to know those little things.
Well, especially like the time of year, right? When you're going into tax loss season, like I said, some of the stocks that have been the underperformers, and a lot of people are sitting in a loss. Maybe they had their spikes and they bought in high. Those can often have more selling pressure than others because they're being used as a tax loss. Yeah. So I'm not that comfortable going much deeper than that, but I do know some people that will, and we can ask them.
Absolutely. And it's all about starting the conversation, right? Even if someone knows now to ask their financial advisor that's already a win, because they know to start probing those things. But we're going to jump to another video.
You should learn how to advise yourself.
Ooh.
Oh, well played. You heard it here, folks.
Heard it here, folks.
That's what we're doing.
What? Heard it here, folks.
That's what we're doing. That's what we're doing over here. I'm going to get a shirt that says self-directed.
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 And everyone's going to look at you like, what does that mean?
Self-directed.
It means exactly what it says, and just walk away. Mm-hmm. So we're going to go, we're going to have Richard Savage, CEO of CLM, Crystal Lake Mining, and Dr. Peter Lightfoot. We're on Skype earlier today, speaking a little bit more about what they were doing, and we're going to flip to that now so you can hear what they said. And we're here today with two guests today, actually. We have Richard Savage, the CEO of Crystal Lake Mining, and we have Dr. Peter Lightfoot, geologist many have known in numerous different companies over the last, how many years, Peter? A few years, but right now with Crystal Lake Mining.
As a consultant for 2 years now.
Yeah. Well, we're here to discuss Crystal Lake Mining a little bit more, as obviously you've been drilling there for some time. There's been some developments. I'll pass it over to you, Richard. For those who don't know, who is Crystal Lake Mining and what are you up to at the moment?
Yeah, Crystal Lake Mining has two core assets, one in Ontario, and Peter can get into the details of these, but the Rainy Risk District in Ontario is a full district property that we have. And then we just acquired Golden Triangle, Burgundy Ridge and Newmont Lake, which has had a vast amount of money spent on it. And we've just been up there starting a drill program, and very exciting.
Yeah, well, why don't we start with Ontario first? I believe it's the Nickelback property. Are you still drilling over at on the Ontario property? Are you planning on drilling for as long as obviously weather can permit?
We're not currently drilling right now, and we're analyzing that, and depending on what advice Peter and other geologist experts we have will decide what we want to do there.
Absolutely. And Peter, some of our members have watched videos on you for some time. You're very, very passionate about what you do. What made you passionate about this, the Nickelback property? What stood out to you?
Yeah, so it was Crystal Lake was one of my first clients when I started up my consulting business 2 years ago, and I took a look at one of the occurrences on the property where there was significant nickel copper sulfide mineralization at surface. It was interesting. I looked at it in a regional context, and the occurrence is one of two. The other being to the northwest at Rainy River Gold Mine. But these two occurrences were not really very well known to me. I put them in a regional context, and they sit within a major structural zone. And there were a large number of other intrusions and magnetic anomalies in the area. So I basically took the view, stand back, yeah, this is interesting. There's a place here to go and evaluate, but there's a bit of a regional play here as well. And that's where the story started for me.
Mm-hmm. And how long has Crystal Lake been mining in that area, whether it's been mined before you took over or just in general for investors who are just tuning in?
It's not actually been mined previously for nickel, copper, or precious metals. It's basically still a mineral prospect, but it's been an area really that I think has been ignored for the last probably 50 years or so. So Crystal Lake really got in there and started to put together the story, and out of that. A number of possible targets have come up, and the basis for quite a lot of future work in the area.
I appreciate it. And we were speaking, Richard, really quickly, and then we went into Ontario just to focus there for a moment. But there's a new property that you've recently gone into. I believe that was the Newmont Lake property in the Golden Triangle. What brought you over there?
That area has had $16 million spent on it, and we wanted to get into that area just for diversification for the benefit of the shareholders. And it's 436 square kilometers, so it's a huge property. There's a lot of money being spent in the area where we have majors around us in that property, and 43101 reports. I mean, again, Peter can talk to the details of these things. But we just thought it was a tremendous opportunity with that kind of money being spent and never drilled. And we've gone up and we've started drilling. it's very exciting to see what's up there. There's some land that's never been seen before with retreating glaciers, and we just want to maximize the potential that land may have.
Yeah, and we had a couple, so we turned to some of our investors as, I'm not sure if the two of you know, we do have an investment community, Follow the Money Investor Group, and a lot of a huge chunk of our community is love the mining exploration sectors. They're all about, so we turned to them for a couple of questions. And these may be for yourself, Peter. One was, when it comes to drilling in New Mont Lake property, how late into the winter can you drill up there? Is it already taken place? What's the drill program looking like exactly?
Yeah, so the acquisition of this project took place fairly recently, and so this year we're not expecting to be on the ground doing very much work. In reality, at the sorts of elevations we're talking about right now, it's pretty hard to carry on work. The snow has arrived, and it's getting more difficult in the higher elevation areas of the property, and it's some of these areas that really are the more interesting, in areas where there has been a significant retreat of the ice. New mineral showings exist at surface, and these are the crux of where we want to follow up. So it's definitely an area that we're going to be putting together a lot of information from previous work. It's called a compilation process. We'll be putting that data together. There are about 20 odd opportunities to evaluate on the property. We'll be going through those over the winter and ranking them and making the best possible decisions on a drill program and further work for next summer.
Yeah. No, and I appreciate that. 'Cause it's interesting that you said how the glaciers have gone down, because one element that we started seeing in other different plays across Canada is that we're starting to see that with these really abnormally warm summers, is it safe to say that we're starting to see in different parts of Canada especially, that we're finding parts of mountains, we're seeing parts of mountains that up until this point had never showed themselves because of all this ice? Is that like a recurring theme over the last few years?
Yeah, and in my view, it's an ongoing effect. There is definitely a shifting climate that is producing this effect, and we are seeing new geology and new mineral occurrences as a direct consequence of melting.
Oh. It'll be exciting, right? Especially if over the last 2, 3, 4 decades, whatever it be, previous people, whether they've been into a spot or not, they might have looked at that, hadn't seen much, but now we're having a better view of these things and hopefully being able to find deposits, like you said before, are just starting to show themselves.
Yeah, it's a matter of doing the work. When a new occurrence is discovered, you basically you've got a lot of basic field work to do, a lot of sampling and rock chip sampling, geochemistry, geophysics. There is a pile of work to be done in these areas, and the opportunity for discovery associated with this is very good. Absolutely.
Well, speaking of discovery, I don't know if I can necessarily label it as discovery, but another question from one of our investors was Burgundy Ridge. What enticed you to look into that area?
Well, Burgundy Ridge is an area where this is a classic example of basically new occurrences of malachite-stained rocks and gossans at surface in association with a carbonate next to a porphyry stock. It has some of the elements of what might be skarn mineralization, and the copper and gold values that have come out have been very encouraging. So we've definitely focused this season on that particular area in order to better understand it and to develop a groundwork and framework for next summer.
Yeah. Absolutely. And one last question for you. When it comes, and this is for yourself, Richard, when it comes to what investors should be looking into over the next little while, what are areas that investors can be excited about? And what are we looking into any needs for financing coming up, or what are those different areas that as an investor we should be prepared for?
Since which we really are, we're going to have sampling results and drilling results over the next 2 months. Then we come into winter and we've got Rainy River District to look at. And in a recent news release, we talked about non-resource opportunity that came to us unsolicited. So we will have something to talk about in all seasons, and I don't know of any other mining companies or many other mining companies that have that opportunity. So that in itself, I think, offers investors huge potential. So it's not just a seasonal play. As far as our recent acquisition, and Peter maybe could have the final word, we're on the same trend as Garibaldi Resources, which is working towards a discovery. We feel sampling results and drilling results will lead us to the same opportunity. Time will tell, and those results will tell. And we have a vast district, again, in Rainy River, which, Peter just dived further, and we're looking at different mineral occurrences that we hadn't expected in that area, and the third opportunity. As far as financing, every financing we've done has been at a higher level than the previous financing, and we've got a great shareholder base. We've never had a problem raising money. Yes, we will need to and want to raise funds for this recent acquisition we've made. We want to do an extensive drill program, and we may spend considerable amount next summer to take full control rather than over a period of time. We have full control of it, but rather than doing it over a 3-year period, we might just accelerate and do everything next summer. And in order to do so, there's all sorts of groundwork that needs to be done through the winter, which will keep everyone busy and exciting. And we'll have, again, 2 other things to talk about prior to that spring drilling program. So there's going to be lots of news coming out of Crystal Lake.
Oh, excited to hear. Well, gentlemen, I appreciate you coming on this early in the morning and being able to speak a little bit about your company, and for all the viewers watching this and different investors to get a little bit more knowledge into who you are, what you're doing, and what to expect in the near future. So I appreciate your time very much. We look forward to having you again on the show in a few months' time when we start looking back and seeing where the progression's going, and maybe breaking down some of these assays that might be coming out in the next little while.
Great, thank you.
Thank you.
Thanks, guys. And we're back again. We're going to have Greg. I'm going to call you out. You can just put your phone to your ear so you can hear the call right now.
Hello. What is up here?
Because we have Johnny Mack up here.
What's going on?
John, how you doing?
Good, gentlemen. How are you?
Doing well.
Oh, this is great.
Just loving life
this is
over
comfortable,
here.
guys.
What do we got up here?
Everyone can hear me okay and see my screen okay?
Yeah. Greg's on his phone. He can listen. He's listening to you on his phone. Okay, so
okay.
We got CCW up here.
We do?
Okay.
Oh, okay.
Well,
let me. I'm gonna switch screens.
Okay.
I was actually taking a look at Garibaldi, so.
Is there any news out yet?
No. So it's been what I'm watching today. The much-awaited follow-up assay release. I think as everyone who's following the company knows, the company had given some guidance that we would be, expecting to hear from them by the end of the month. And on that note, personally, myself, I'm not going to hold them to it. I know typically with the company, they haven't been great, I guess, at hitting timelines. So, if we don't see anything until early next week, I personally wouldn't be super surprised by that. But
yeah, well, even just looking at the chart there, it looks pretty thin up to $2. Interesting, and surprisingly, MTS is up like almost 30% right now. All right.
Yeah, so that's the Garibaldi chart. So in the Facebook Live on Sunday that we did, I saw a lot of weakness in the chart, and we did end up kind of breaking below that support zone that I had kind of identified before. So we got that close, even though we'd had these tails before, we never closed below this level, and we got a weak close. The volume has stayed low. Again, I see this as some nervousness among GGI holders. I don't see a lot of aggressive buyers out there. And I think what's kind of held us up more than anything is there hasn't been a whole lot of sellers here as well. So that's been good. But interestingly enough, lately, you know, when we made that this lower low, we've created some divergences. So, you know, here's our lower low here, or you could call it here, however you want to do it, and we see that we're actually diverging in momentum on relative strength index in the PPO. Again, for people that don't watch very often, this would be like your MACD indicator, same thing. So that's interesting. Even money flow as well, you're seeing a divergence. So I would call these all bullish divergences because we are making new lows in the stock, but we're not seeing that actually in some of these indicators. So it tells me, you know, I'm not gonna say it's bullish right now, but it's interesting. It tells you to keep an eye out for potential reversal. What we really need to see on Garibaldi, we need to see some volume come in, and we need to see, you know, a reversal candle with follow through, and we haven't been able to do that yet. So,
well, thanks for pulling that chart up. If news breaks while we're live, which we're hoping it does, we'll go back to that. Let's switch over to cannabis. Pulling up a weed chart.
It's a canopy.
It's a cannabis.
So that's actually that's just a quick sort of candle glance at the sector. I put all sort of the bigger.
Nice. Look at him all organized.
Yeah, actually planned a little ahead of time, or try to. So you know, Afria or Afria, I don't know what the official correct way of saying it is, but APH having a really good day. I believe that one will be trading on the New York Stock Exchange on Friday, so I imagine that's probably having something to do with it. So it looks like one of the stronger ones today. Aurora, Canopy, they gapped up, and they were looking a little bit weaker earlier, but I think they've followed through nicely since. So this is your Canopy chart. So we're right in that key area. If you remember on the last show, TA 101, previous resistance becomes support. So we had support, we got a bounce off that. The 100-day moving average was there as well. We did break through that, and now we're kind of back up there again. So we're kind of right at that key level. I think if you look on the hourly chart, we have followed through on the gap up. So we moved higher. We didn't break the low of the day, and so now we have a higher high than earlier. So that's good. So that's looking interesting. So again, keeping an eye on this resistance level here, we're sitting right about there. So it would be interesting to see if it can follow through and break, or it needs to correct a little bit before it does. Interestingly enough, you know, as we've seen in the past, it is tracking the S&P 500 today by the looks of it. So that's the daily chart on SPY. There's the hourly chart on SPY, kind of a similar type thing. Yesterday, if you compare the daily charts, SPY finished, you know, towards the end of the day, whereas weed was off the high. So there was a bit of a decoupling there, but they seem to be following each other somewhat closely today, at least. So that's interesting. So obviously, with the the overall markets recovering a little bit in the U.S., that's good. We had a gap up. You know, everyone has been sort of shaking in their boots here with the drop we've had in the market. So I think this coming as a welcome relief to a lot of people.
Is that a higher low on the SPY chart on the S&P?
Well, I don't think we can say that yet. I mean, we've had a lower low here. You know, here's your low, and then we've made new lows here. So at this point, you know, you're just looking. I would expect a higher low to come in, and you know, we would hope a higher low would form. Wherever this is going to stop. I mean, we have the 200-day moving average to deal with now. One thing I was noting, the 10 period moving average had acted as resistance on this little attempted recovery, and we did manage to get through that today, so that's good. You know, we have the 20-day moving average. I mean, right now the price is up against all these big moving averages, so you know, these can potentially act as resistance you know, if the price is going to try and make a recovery. So if we sort of zoom out on a longer term.
And this is what I was going to say. Did we set a higher low from the January crash?
Oh yes, sorry.
Right.
Yes. So this is looking out 1 year. Kind of identified this green area as sort of an area of support. The dotted dashed line would basically correspond to the close of the two lowest days we had, and they were very close. They weren't exact, but they're pretty close. So I'm just going to call them the same thing. It was around 25.80. So you see on the low that we hit last week, we didn't quite break into this zone, but pretty darn close. So we've seen that the support, obviously the buyers are coming in. So yes, so far, I mean, we have held above the low, but it's not to say we're out of the woods yet. You know, this price could easily turn down, and you know, if it does, we would hope that this support area holds, and I would especially hope that we don't close below this mark here,
right.
the same, you know, the same low close that we had earlier in the year.
That would be
yeah, so I think I noted it too last week. We're starting to see a bit of you know, positive divergence in the momentum. So your stochastics, you know, we did set a lower low here, but we had a higher low there. RSI, same thing. PPO is at least starting to converge with its signal line, which is good. I mean, obviously we're very negative. And I'll note, for example, that even though we're not as low as we got in earlier January, February, March, that we actually have come well below that on the PPO. And if I haven't mentioned it before, that's why I like the PPO versus the MACD. You can look back in time and compare these peaks because it's all relative to each other, whereas the MACD will change as the price of the underlying security changes. So anyway, that's something to note, that we are seeing a lot more negative momentum this time around than we had even on that big correction last time earlier in the year. So something to be watching. I was, you know, before I forget for the third time last week, I did mean to throw out an interesting tidbit that the week, I believe it was October 22nd to the 27th, historically on the S&P 500, from my understanding, is the worst week of the year. If you go back, I think like 50 or 60 years, it's the worst performing week of the year. So you know, and it wasn't kind to us again in 2018. It was not a good week. You know, we saw some new lows. We saw a lot of volatility. So on another note, again, from my understanding, the week or the period that we're leading into, sort of the end of October going into early November, is actually historically a strong period for the S&P 500. So we also hope that that kind of holds up.
Okay, this leads me into something that I didn't prep you for, so we're going improv here. Tax loss. We're going into tax loss season, correct?
Yeah. Yes.
Okay. When is that window of time where? And I was telling our viewers earlier, that's typically some of these stocks that haven't done that well, you know, are the losers. You can see more selling pressure in them because people are using them now as a you know, as a tax move. When is that window of tax loss season?
I think you'll get varying opinions on that, Karl. Tax loss selling season. I mean, essentially, to claim a tax loss, you have to sell by the end of December. So whatever the last trading day is in December, you have to sell 2 days before, because you have to keep in mind that when you actually buy or sell a security, there's a settlement period. So your shares don't actually sell until 2 days later. So when it comes to booking the tax loss for Canada Revenue Agency purposes, they're looking at the settlement date and not the actual date on which you hit the sell button. So I think November, December, personally, in my opinion, you would start to see it. Some people like to do it early, get it out of the way. And there is a sizable group of people that like to actually hunt or shop around for bargains in stocks that have been beat up, you know, throughout the year, and they're actually looking to buy from the same people that are looking to sell in maybe December. So it's an interesting balance that you're going to have buyers wanting to come in and sort of take advantage of, you know, what could be a fire sale if people are just, you know, selling indiscriminately just to take a tax loss.
Okay,
but
cool.
I think that period of time, it will depend on who you're talking to.
Right. So Okay, a couple things here. We have one of our viewers wants to see a CLM chart because we had Lightfoot on and Richard Savage from CLM. So if we can just look at their TAs. But while we're doing that, just to confirm, you cannot use the tax loss out of your TFSA, correct? If you take a loss in your TFSA, that is not eligible for a tax loss, correct?
That's correct. Yeah, if you're taking a loss in your TFSA, it's contained within the TFSA, and you know, whether you lose money or make money in your TFSA is not supposed to matter from the perspective of taxes. That said, to take as we all know, the people that are doing really well in their TFSAs, sometimes they're coming across a different story with Canada Revenue Agency. But on the flip side of the coin, you know, the 90% that are getting into the really high risk stuff and are losing, they're not able to take a tax loss. And on that note, I think it's important to probably mention, because this question comes up a lot. If you have shares in a cash account and you sell at a loss, and you're going to move though, and you plan on rebuying those shares in a TFSA, keep in mind, if you're selling those shares at a loss, you cannot buy the shares back in the TFSA until 30 days has passed.
Right.
If you don't wait the 30 days, so for example, if you're down money on Garibaldi for this year, you sell at a loss, and 2 days later you're moving it into your TFSA, you will lose the ability to claim the loss, the capital loss on Garibaldi against other gains that you might have.
Correct. And just for the viewers, our good friend here, Johnny Mack, is not an accountant. He's just super educated in these fields because he takes care of himself. He's a self-directed investor. So, but not advice.
Before we go to CLM, can we ask a question? Somebody asked, PPO. I know you explained that it was different from MACD, but we had someone specifically asking, what is a PPO?
It's the percentage price oscillator, so it'll essentially give the same signals as the MACD, but it's going to be bounded. I don't want to get into the exact technicals of it, but I mean, we can cover that on another show maybe. But a MACD, so if you're trying to compare a company like let's take Garibaldi for example, or sorry, we'll get back to CLM in a second. Let's just go to a weekly chart. So if you're trying to compare the MACD for a company, say down here, and then you're trying to compare it up here, you won't be able to compare it because the MACD is based on the absolute difference between the 12 and the 26 day or period moving average, whereas your PPO is not. It's based on a percentage basis. So you can compare the PPO on periods where the price has changed, and that comparison still holds. I don't know. I hope that answers that person's question.
Okay. No, it does.
That's why
the difference between 1 cent and 2 cent is a whole 100%, but a difference between 1 cent, or $1.01 and $1.02, that is not 100%. So that using the PPO, you're spreading that out, so it's a percentage opposed to an absolute change of one number to another.
Right. Yeah.
All right.
So here's CLM. Right now it's in I would say a sort of short to intermediate term downtrend. So we are making lower lows and lower highs, as you can see. The price is failing to get above the previous highs on the daily chart. This is just a rough price channel. I'm not trying to imply, support or resistance here, but just to give you a rough idea that, the stock is sort of moving down. So we did break this low before, we did break this low here. So I think if you're a bull in CLM, you want to see that daily trend sort of turn around. And there's quite a difference here between the peak we saw around 62 and where we're trading at 40. I mean, that would be a 50% move just to even break even with that. So, this is one of those where I would expect kind of a move up and then maybe set a higher low and then sort of pivot off of that and try and change the direction that way. The volume, I note that on this anytime the price seems to spike, take a look at the volume. We're getting a lot of sellers coming in, so there's definitely some selling pressure. Anytime buyers show up to try and push the price, that's interesting that we always get these sort of blow-off tops on a short-term basis. The volume spikes and the buyers can't seem to hold. And in this case, this was a gap up. If you compare to where the price opened, so here was the close, here was the open, it pushed all the way up, and sellers pushed it all the way down. That looks like a sell the news event to me. I know that never happens in the junior exploration space, but apparently it happened to CLM. Interestingly enough, on this one, the buyers did try and make a comeback as well, but obviously a much higher upper wick, so that's showing some supply coming on the market, and there's simply not enough buyers to soak it up. And in general, I would say tough to get a good read on CLM, because as you note, the volume here on a normal basis is pretty small. Yes, it's pretty.
Can we see the house positions on that? I want to see where TD lies. The good old CLM accumulation.
How far back do you want to go?
Let's do a year.
TD Securities by a long shot. Yeah, by a long shot. Yeah.
Okay.
And then anonymous, anonymous sellers by a long shot on the downside.
Wow. Alrighty. Well, I know our friend Greg here has a couple questions. Greg's rudely on his phone.
I know. Why are you on the phone this
whole
time?
Why are you on the phone, bro?
Yeah, but they don't know that.
Okay. Do you have a couple questions here, Greg?
I do. John, how you doing, buddy?
Good. How are you, Greg?
I'm doing all right. So my question is, now if I'm in a few PPs and I get warrants with those. Now, if I'm not in a PP, how do people buy warrants in stocks?
Okay, that's an interesting question. So how you can do that is sometimes an reporting issuer will securitize their warrants. So they'll actually list them for trading on the exchange. So you can buy them and sell them just like you can a stock, like an equity, but they're actually a warrant. And the typical way it's done, so if you have a symbol, if you have trying to think, like Emblem is one that just comes right off the top of my head, EMC.warrant. So the suffix is .WT, and that sort of designates the warrant, and it's a securitized warrant. And when I say securitized, I mean the warrant is trading as a security, just like a stock that you can buy on the TSX or the TSXV. You can actually go out and buy it. Does that answer your question? It forms a market, and we can bring up. I can bring up.
Why is it that the warrants are lower than the share prices now?
So I just brought up Wayland Group, American. I think that's a newly listed one. So the reason that it trades lower, okay, so Wayland Group is trading at 146 today. Now you have to keep in mind when you're buying the warrant, you're paying. So if I was to buy this warrant right now, just hit market buy, I'm paying 28 cents a share. And by doing that, I'm giving myself the ability to buy the stock at whatever the warrant strike price is. So correct me if I'm wrong, but I believe on this particular warrant, so anyone that participated in this private placement, the strike price is $2.15. So right now, and $2.15 is the price you pay in order to buy the shares. So you're paying $2.15 a share to buy Wayland Group. So right now that would make not a lot of sense. Why would anyone want to pay 28 cents for the right to go buy Wayland Group at $2.15 when the stock is trading at $1.43? Obviously that makes no sense. So right now this warrant is trading at what we would call out of the money. So it's not in the money. There's no intrinsic worth. In other words, there's no intrinsic value. Exercising the warrant doesn't do you any good, because you can buy the stock at a much lower level just on the open market. But the way that you play warrants, or that most people play warrants, is it's a way to take advantage of gains in a certain security on a leveraged basis. So if Wayland Group, for example, was to go up in price $1, if you were, if it was to go from 143 to 243, then that's going to give you a gain of about 60% from current levels. If Wayland Group goes up $1, you can expect the warrant price to go up, just to keep things simple, roughly $1 as well. I'm just to keep the example really simple. So if you bought at 28 cents and your warrants are now worth 128, then obviously the gain on that, you're gaining like 450%. So you're gaining, multiple times higher returns on the warrants. So the warrants are going to give you what's called leveraged exposure to the upside. So that means for every gain you see in Wayland Group or whatever security it is, if that security goes up 5%, the warrants might go up 20%. And that's how a lot of people play them. They don't actually buy the warrant with the intention of exercising it. They buy the warrant with the intention of selling it as the price of the underlying stock moves up. Now, of course, with anything in this world, you're going to get better return or reward, right? But the opposite side of that is more risk. So if the stock drops 5%, you can expect that the warrants will also drop quite a bit more than 5%. So it's leveraged both ways. So these kind of plays are more appropriate for people with higher risk tolerance. It's very similar to buying options on the options market. So people that trade options, calls and puts. Buying warrants is basically like buying a call option on a stock.
Okay. Thanks, John.
Does that answer your question, Greg?
100%. That was actually really informative. Wow.
Yeah.
Alrighty. Well, Brandon, what would you like to look at?
Well, apparently, you can't look at it now, but HS was lighting up and it was halted on news. I haven't looked at them in a while.
Was that Health Space?
Health Space, yeah. I'm feeling like right now might be a good little segue into announcing who my guest is on this week's Sunday Night Live.
Do tell, who's coming on?
And I have asked my good friend Johnny Mack to co-host.
Ooh.
So if he's available, he might do that, if we're lucky. Of course, he bailed me out last Sunday when I had technical difficulties and I couldn't join. So Johnny Mack actually took over and did a very good job. But yeah, so I have Jason Spatafora, Wolf of Wheat Street, coming on to join me on this week's Sunday Night Live. We will be discussing everything cannabis. I know there's a lot of T-God shareholders that I'm sure would like to hear what he has to say, as he loves T-God. So yeah, Jason Spatafora on Follow the Money Investor Group, Facebook Live with Karl and Johnny Mack. What do you think about that, Brandon?
I think you said it like a 90s movie trailer. I loved it.
Whatever. Hater.
Hater.
All right, so we got back the.
So there's your chart, Brandon. But I don't like to try and do. I don't like to try and do TA too much on penny stocks like this, where they're trading like especially below 5 cents. But I mean that's quite a move. So are you, just so I'm following? Did the stock halt just now to release news, or is this after the halt?
I'm just going off of a comment in our FTMIG live room. And this is just from one of our investors. They said it was absolutely lighting out. Check out the bids and asks, he's saying. And it was halted on news. So I'm actually not too sure. I'm just going off a comment here.
Okay. So, I mean, if it's halted now, that's interesting. That tells you there was a bit of a leak on that stock. Yeah, so right now the stock's halted. I can see that obviously the bids are higher than the offer right now. So it's halted. So, this is an interesting move that we got. 4.2 million volume out of nowhere, jumped up almost double, and that came out before the news. So obviously a few people were in the know ahead of time and buying in the market. So it'll be interesting to see, whether there's follow through on that or not.
Well, isn't it interesting how often that actually happens? You'll look in chat rooms or look at people and you'll start seeing this crazy volume and like, oh, something must be out. Someone's got loose lips. And then sure enough, the next day or even that day, a huge news release comes out from a halt. It's interesting these things aren't caught more often.
Yeah, I think it's a, it's a matter of the regulators kind of being overworked. There's just way too many times that, you see this happen, and there's just not enough people to properly police the markets. So.
Oh, I'm hearing it was halted an hour after the news.
Oh, okay. There you go. Well, so the news came. Okay, so the news came out. The stock ran, and then it was halted. So okay, are they halting it to correct or for clarification? Is it a regulatory halt, or is it just is there more news coming out?
I can quickly ask Wes here, because he's the one who did this. But yeah, no, I thought we would. Oh, he said Yahoo Finance. I'll pull this up now. Trading halted, has been halted by IROC company. Let me go into this. Trading as a security is publicly listed. Temporary suspension halt of trading as security of a trading halt and implement. Oh, there's no actual reason. It just says pending company contact.
Okay, yeah, pending company contact means the regulators are probably looking for clarification on something. Just gotcha. So you're aware. So that would be IROC driven or Securities Commission driven. If it's the company putting out news, it would be, at the request of the company pending news. So when you see the pending company contact, that would be IROC probably looking to get some more clarification on something that was in the news release.
Yeah, I remember one. What was it? It was earlier this year. You might remember this one. It was a cannabis company, and they were talking. They put this news release out saying that they were about to make like $250 million from all of these. It was these little builds of cannabis, and they grow on top of each other. They said, all we need to do is do this, then we'll do a raise, then we'll do this many, and then by next year we'll make it $250 million. And the stock was flying, and then they got halted, and they had to retract everything they said.
On that note, do you want to see an interesting chart?
Go.
Johnny Mac, do you remember that stock Y?
Yes, I do.
Well, Brandon, you want to hear a little bit of... Well, check this one out.
Is it kind of the same thing?
Well, similar.
I actually can't bring it up, but I'm guessing it's delisted.
Oh. Well,
yeah, it's not coming up. So
basically, what happened there, John? Remember there was a news release saying that they had this an offer. Was there an offer on their property?
Yeah. They had secured a buyer for their property, and I remember that one because the way that the offer was written was multiple times higher than the market price. I think it was like 10 times higher or something pretty crazy high. And it just seemed, and there was no evidence that, the company acquiring them had tried to, go into the market and get a toehold position. There wasn't even an attempt. They just came in and said, yeah, we'll take you out for, 10 times whatever the current value is. It might even have been higher than that. I think it might have been up like 13 to 15.
Yeah, it was. And there was no arbitrage buying or on the ask or whatever you call that stuff.
Yeah, the stock. So, anytime a stock announces a buyout, you'll have hedge funds moving very quickly on that. And they will, push the price close to where the buyout price is, less a bit of a discount, and that discount is for them to make money, and the discount is also proportional to the amount of risk that they see that the deal doesn't go through. And in that case, I want to say the stock doubled, maybe even tripled, but came nowhere near going like 13 or 14 times. So it was very clear right from the get-go that there was a lot of doubt in the market. Why aren't some of these arbitrage, event-driven hedge funds out there, buying this up? And, it came out later that the company that wanted to buy them was unable to secure funding, so that deal fell through. And yeah, I believe a lot of people lost some big money on that one.
Yeah. Okay, dude, we are pretty much out of time. I see there's some more buying coming in on Garibaldi here, so who knows what'll happen there. But yeah, hopefully you can join me on Sunday. If not, not a big deal. I mean, it can just be me, but it's always better if we have you because you're Johnny Mac, and everybody loves Johnny Mac. Right?
Well, one
Absolutely.
one other thing to make note of, I think what we're seeing in the U.S. markets is what we've needed to see this for a long time, is all of the aggressive sectors are leading today. All of the sectors that have been sort of leading lately, which is all your defensives, your utilities, consumer staples, real estate, are all lagging, and that's what we want to see. We want to see money coming back into these aggressive stocks, and that is what's going to push, the S&P 500 up. And I'm one of those guys that I'm going to be watching any kind of rise closely. We want to see the right kind of money. We want to see money, staying in the aggressive sectors. The last thing we want to see, if the S&P 500 is rising and its utilities and and consumer staples, all your defensive sectors, giving us this push. So technology, consumer discretionary, the aggressive sectors of the market, I'd like to see them show some sector leadership and continue on any kind of rise we see, and make sure that the money is rotating into the aggressive sectors. If we don't see that, then that's going to call into question any sort of rebound that we get in the S&P 500. And as we all know, the U.S. markets they're impacting people in Canada, especially in the MJ space.
Well, hey, I appreciate your time, my man. Every time we speak, I think I almost know it, and then there's like 5 other things I need to look into, so I love it.
You learn something every time, Johnny.
Every time.
Oh, 100%.
Every time. My good man, thank you for coming on. Gentlemen, we say adieu.
I believe so.
What?
Until next week.
Bye.
Bye.
Yeah.
Take care.